Hey everyone, it's Julie here with TipRanks, and today we're taking a look at top analyst stocks with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and happy October 1st. Today we're taking a look at 3 top analyst stocks. These are stocks that have been picking up buy ratings from 5-star analysts lately, and on top of that they have a unanimous strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. We found these over on the TipRanks Top Analyst Stock page. Here you'll find a collection of companies that have been picking up those buy ratings from 5-star analysts. You can narrow it down by factors such as market cap and sector and get your list here down below. And just before we get into these 3 top analyst stocks, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also get 40% off TipRanks premium subscriptions right now. So if you've been wanting to unlock some fantastic investment research tools, now is a great time to do so. You can head on over to the TipRanks website to take advantage of the sale now. Let's get right into our unanimous strong buy top analyst stocks. First on the list, we're taking a look at PROG Holdings. Trading under the ticker PRG, they're currently priced at $47.74. In the past year, their stock has jumped up 50%, and in the last 3 months alone is up 42%. PROG Holdings is an LTO or lease-to-own company doing business through 4 different divisions, each with their own specialized service. Their progressive leasing provides a combo of e-commerce, app-based, and in-store lease-to-own options, giving consumers flexible solutions for a variety of competitive, transparent payment choices for all kinds of merchandise. Their V Financial is a financing service providing credit access to subprime lending customers. 4 Technologies is a fintech company providing buy now, pay later options for retail consumers, and Build is another fintech subsidiary offering a wide range of credit building tools to its customers. Together, these 4 subsidiaries have made PROG Holdings a $1.4 billion leader in the LTO sector. They'll be sharing their Q3 earnings report in just a few weeks on October 23rd. This follows their Q2 report back near the end of July, where the company had both an earnings and revenue beat and increased their full-year guidance. For their third quarter, they'll be anticipating earnings per share of 80 cents, which is a slight decrease from last year's. This follows their Q2 earnings per share of 92 cents, which beat expectations by 19 cents per share. Revenue of $592.2 million did beat estimates by nearly $19 million, while the company saw adjusted EBITDA of $72.3 million. With this, they raised the full-year consolidated revenue and earnings outlook. We recently saw 5-star analysts from both KeyBank and Jefferies increase their price targets on the stock. The analyst at Jefferies said that at virtual lease-to-own companies that the firm covers, they're focused on GMV growth for the quarter, and given that more traditional providers of credit are tightening, the firm anticipates some customers to trickle into PROG's customer box and drive top-line growth. Another analyst at KeyBank increased their price target, saying that they were incrementally positive on the company's initiatives and revenue growth opportunities in the second half of 2024 and 2025. PROG Holdings does just have 4 current analyst ratings, but comes in as a unanimous strong buy. And the average price target comes in at $51.75, implying an average upside of 8.4%. Looking at those ratings down below, we can see all 4 of the current ratings were increased in price target. On the low end, we do have a buy rating from back in July with a slight downside of nearly 2%, while our most recent price target coming in just today is at $58 for an upside of 21%. Second on our list today is Barrick Gold. They trade under the ticker GOLD, currently priced just above $20 per share. The gold stock has climbed 45% in the past year, and in the last 3 months is up over 22%. Barrick Gold is in the production and sale of gold as well as copper. As a sector-leading gold and copper producer, their portfolio spans the world's most prolific gold and copper districts and is focused on high-margin, long-life assets. They have mining and exploration projects in many countries, including the United States, Canada, Peru, Chile, and Australia. In 2023, they had 4.05 million ounces of gold production and 420 million pounds of copper production. The company also just recently shared that they're projecting 30% growth in the production of gold by the end of the decade. They noted that they have 6 Tier 1 gold mines with more in the making, and their long-term plans are based on quality ore bodies with industry-leading grades that drive improving cost profiles. Barrick Gold will be sharing their next earnings report on Halloween, October 31st, and this does follow an earnings and revenue beat for their previous quarter. For their Q3, analysts are anticipating earnings per share of 35 cents, which would be an 11-cent jump over last year's. This follows their Q2 earnings report, where they had earnings of 33 cents, beating estimates by 6 cents per share, and revenue came in at $3.16 billion, beating estimates by $32 million and growing over 11% year over year. The company reaffirmed their full-year guidance, saying that they're positioned to deliver on gold production. Just a few weeks ago, Barrick Gold had a 5-star analyst from Argus Research upgrade their rating on the stock to a buy. The analyst said that the company is a major producer of gold with a long history as an industry leader and also possesses a clean balance sheet. Given global economic uncertainty, the wars in Ukraine and the Middle East, and inflation, gold, which is already trading near the top of its 5-year range, is likely to remain in demand. Argus added that it's also impressed with the company's decision to run the business for the long term, focusing on replenishing and replacing gold reserves rather than buying them at a premium. The gold stock has attracted 11 current analyst ratings, all coming in with a buy. And the average price target of $24.61 implies an upside potential of 21.5%. Looking down below, our low-end price target does come from August here with an upside of 4.3%, and our more recent high-end price target here coming from CIBC with an upside of 33.5%. And if you've made it to our third stock today, then make sure you've hit that thumbs up button. Third on our list, we're taking a look at DigitalBridge Group. They trade under the ticker DBRG, currently priced just shy of $14 per share. Now, overall in the past year, they are in the red, down 17%, but have been climbing recently in the last 3 months, gaining over 5.5%. DigitalBridge is an alternative asset manager investing in digital infrastructure businesses. They invest in companies that provide infrastructure solutions focused on AI and next-generation digital infrastructure, delivering a converged network experience for an increasingly connected world. They've demonstrated their expertise actively operating, building, and scaling digital infrastructure businesses across macro cell towers, data centers, fiber networks, small cells, and edge infrastructure facilities, positioning them at the heart of a converging digital ecosystem. The company has 45 portfolio companies and $84 billion in assets under management. DigitalBridge will be sharing their next earnings report also on October 31st, and this does follow both an earnings and revenue beat for the previous quarter. They reported Q2 earnings per share of 44 cents, coming in with a big earnings beat by 48 cents per share. Revenue came in at $390 million, passing estimates by about $90 million and seeing some big year-over-year growth. And just today, we had a 4-star analyst from JP Morgan bump up their price target on the stock. They said the enormous demand for hyperscale data centers is driving the overall market and secondary impact to colocation. Cloud and digital transformation demand is robust from enterprise customers, which are still evaluating their artificial intelligence needs. JP Morgan sees DigitalBridge as one of the best ways to play the AI data center trend. The stock comes in as a unanimous strong buy with 9 current analyst ratings. And the average price target of $19.08 implies an upside potential of over 36.5%. Looking at those recent ratings down below, all of them in the double-digit upsides. Our low-end price target comes in at 14% here from back in August, while our high-end price target is from B. Riley Financial at $24 for an upside of 72%. So that is a quick look at 3 stocks, all with recent ratings from 5-star analysts and a unanimous strong buy consensus. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.